cards is a lifestyle. Sports cards and we live now. Jeremy Lee in the building and every guest that you ever needed. Sports cards after hours keep the hobby heated. Updates, hobby talk like you never seen it. Sports cards live and none could ever beat it. Sports cards is a lifestyle. Sports cards and we live now. Welcome to another episode of Sports Cards Live with your host, Jeremy Lee.
All right, everybody. Welcome to episode number 229 of Sports Cards Live. It's Saturday night, June the 15th, 2024. My name is Jeremy Lee. I would like to thank everyone who watched and listened last week's episode with Jay Mosley, also known as Mojo Sports. We had a great show. Check that one out. Tomorrow night, no PWCC Hockey Weekly Auction Ending Watch Party show, as it is Father's Day. Myself and Josh from The Gong Show will be celebrating Father's Day next Saturday on this show. Our guest is John Amendola of Mint Inc. in Toronto. Check that one out as well. I'd like to shout out sponsors. Filth Bomb Breaks offers live box and case breaks. They are streaming on 4 channels, 7 days a week, almost 24 hours over on Fanatics Live. Check out Filth Bomb Breaks. If you're looking to add a grail to your collection, make sure to check out Fund Your Cards, the hobby's leading consolidator. They'll help you finance the purchase with your own cards. Visit fundyourcards.com and tell them Jay Lee sent you. I'd also like to shout out hobbynewsdaily.com. Check out that website for daily news from the hobby. And Leighton, Sheldon, Just Collect will be joining us later on tonight for the Vintage Spotlight segment. If you value transparency, accuracy, and consistency in card grading, please visit taggrading.com. Also, guys, remember this show, Sports Cards Live, is available on Spotify, Apple, or wherever you listen to your podcast. Follow and subscribe for free, and please leave a rating, review on your podcast platform. Really appreciate that. Want to thank all loyal viewers, podcast listeners for your ongoing support. If you're not yet subscribed to the channel, please take a moment and do so. I have a special shout out tonight, everybody. Special shout out to a young hobbyist I met at the Montreal Expo last month, Sebastian, and his father, Frank. Hello, gentlemen. Shouting out to you guys. It was great to meet you, Sebastian, especially your dad too, but especially the young Sebastian at the Montreal Expo. As always tonight, everybody, your comments, your questions are in play. Let's get to it. Tonight's guest started in the hobby, visiting his grandmother in Minot, North Dakota. He'd go by packs of 1987 Topps baseball. In 1990, he pulled a Ken Griffey Jr. rookie card, and he's been collecting Griffey ever since, with a few breaks along the way, but he started back in full force last summer. His favorite players of all time are Ken Griffey Jr., Joe Montana, Jerry Rice, Michael Jordan, and his favorite teams of all time are the Texas Rangers, Seattle Mariners, and the San Francisco 49ers. Originally from Burlington, Kansas, currently hailing out of Granbury, Texas. Let's bring him out. David Harstock, welcome to Sports Cards Live. How are you doing tonight?
Doing great, sir. Doing great. Thank you so much for the opportunity to be on your show and speak to your listeners. I'm excited.
Right on. It's good to have you, David. This is a topic that I've wanted to address for quite some time, and being taxation. We're going to talk about a bit more than taxation tonight. That could be a bit of a boring topic. We both know that, working in that industry and discipline for a long time. You still, me no longer. But it's important. It's important, especially for people who are transacting in the sports card hobby. Before we get into that, though, how did you and I link up? What is your version of why you ended up and how you ended up here on the show tonight?
So my version is, so I heard you giving some advice about trading cards and not realizing income when you trade cards. And I just shot you an Instagram message. I wasn't calling you out or anything like that. I just thought I would, provide you with some background about how laws have changed a little bit regarding trading personal property and how you can't defer gains any longer on trading personal property. So anyway, so I reached out to you, and then you fired back and said, well, great, I'll have you on my show. And then the panic set in, and so here I am.
And that was a long time ago. Was that even was that as far back as last year at this point?
So, okay, all right. So that was late November thereabouts, and sort of gearing up for tax season. And you reached out to me. I think in mid to late December, something like that. Said, "Hey, I'd love to have you on my show in February or March." And I thought, well, it's a bit busy for tax guys here in the U.S. in February and March, and so I didn't mean to put you off so long, but I appreciate your patience waiting for me. So.
Well, I know how busy seasons can be, and busy season being, April 15th is a big date, and then you got corporate tax coming shortly thereafter. So here we are in June. Hopefully hopefully your workload is a bit lower as far as your annual cycle goes, and we can get into. Let's hear a little bit though about your hobby history. Take us through. Of course, during the intro, I went through it a little bit, but maybe skip ahead to when you did jump back in here in about a year ago. How did you get back in? I think you've been a collector the whole time, but you weren't sort of focused on the hobby. A year ago, you got back and focused. What was the catalyst to bring you back in a year ago?
Yeah, great question. So one of my clients came in, and he's been a client for about 15 years or so, and sort of a friend as well. And he said that, hey, I started a new business. I said, well, what kind of business do you have? And he said, selling sports cards. And I thought, oh, that's interesting. And so what kind of sports cards do you have? And he has about a $250,000 collection. And he just started buying cards. He likes Leaf a lot, especially the signatures, and he told me about the grading and just kind of a crash course of what he was doing. And so I could sort of semi-understand it. And that kind of piqued my interest because he was telling me what he was selling. And I thought, well, I still have a collection somewhere up in the attic. And so I thought, well, maybe I could start, trying to sell old collection off and get back into it, and just kind of went headlong into it. Made a lot of mistakes. And anyway, it was fun.
So that's what kind of brought you back in. And I want to ask you this: what, myself, been in this thing so long, and I haven't taken any sort of, I don't even want to say breaks, but slowdowns since the late 90s. So I can only imagine when you come back and you're inundated with all this information, all this evolution that's happened, whether it's grading or just the online platforms and the social media. Was there what struck you the most about the cards themselves? Was there something about the amount of them even, or anything? What struck you the most?
What's really interesting about coming back into the hobby is that basically everything has changed. I looked around and said, where's Upper Deck Baseball? and some other companies that have gone by the wayside. I never heard of Prism or Optic or any of those things, or Parallels or numbered cards. It was funny when I first heard numbered cards. I thought, well, they're all numbered, aren't they? You look on the back, there's a number. So it's pretty overwhelming. Then you get into grading, and I mean, it just sort of overwhelmed me. But what really helped me, honestly, is watching shows like yours, and Sports Card Radio, Sports Cards Nonsense. Started listening to the podcast and just kind of familiarizing myself a little bit about it. And there's lots of, as you know, there's lots of hot sports opinions on how to do it right. What are you doing wrong? You're an idiot. What are you doing? So yeah, I've learned quite a bit. Some the hard way. So.
And what do you think? Like you said, you've learned quite a bit now. So what have you changed or corrected or adjusted in your approach and strategy to the hobby since coming back in hard a year ago? What's the main thing you'd say that you've adjusted?
Yeah, just being smarter about purchasing. I couldn't go by a Walmart or a Target without stopping in, picking up a blaster, picking up a hobby box. And I thought, my return on investment's like zero, basically. So I learned pretty quickly that, if you really want to do it right, you just focus on buying singles. And I get that people like to do breaks and still like to buy boxes, and it's actually a lot of fun to do that too. Buy packs. I mean, I grew up buying packs, and so that's not something I'll probably ever stop doing. But just focusing on what I really want to collect, and making it less about, hey, I know I can turn this around and make 20, 30, 50 bucks really quick. Now it's just about, you know what, I'm just going to focus on 1 or 2 or 3 players and just collect what I like.
Yeah, that's what I used to do when I used to crack a lot of wax cases, boxes. If I was going to the LCS, or if I was spending $100 on breaking, I'd want to then spend $100 on a single to balance things out. That was my kind of, because then you'd spend 100 or whatever, say 250, 300, $1,000, and then you spend that amount again. It's like, and I'd open up the product, and I wouldn't necessarily be happy with what I pulled. And so I'd say to myself, okay, to balance that out, I have to buy something specifically. And now I've moved towards almost exclusively just buying the single. So it sounds like you learned that lesson pretty well and early. Mookie Chilson here says, I've paid the stupid tax a few times on a couple bad deals. Can David help me on that front? You can't fix stupid, Mookie. I think that's what we like to say, but we've all paid the stupid tax. No doubt about that, Mookie. Welcome to the show. Vintage Card Collector is here. Says, evening, be careful using your real name in chat tonight. Okay. Redemption, what's going on? Sorry. That threw me for a loop. I hear vintage is, I doubt the IRS is watching this. Highly doubt it. And
I was wondering what he was getting at.
Yeah. And I just clued in. And the other thing that's really important to mention here, guys, is that David is a U.S. tax specialist, United States tax, not Canadian tax for the Canadian people or other countries in the audience. This is going to be really U.S. tax specific, although a lot of things do apply to Canadian tax as well. Okay, Redemption in the house. Good evening. Great. From SoCal, good to have you. Jeff McMahon is here as always. Good to see you, Jeff. Signs of the time. Let's go. Robert Scott, good evening to you. Stooks is here. What's up, Stooks? The Professor is here. What's up, Professor? Bobby Burrell says, the show might be taxing on my brain. It might be, we were thinking, like, is this going to just bore people? They're not going to want to watch. This is really interesting stuff. You'll see. Trust me, everybody. This is interesting stuff. Tom Newman says, is it illegal to have people send checks to your debtors instead of paying you directly for a card sale? That's it. That's listen, you've got tax avoidance, you've got tax, minimization, and then you've got tax evasion. And that wasn't the right order. Evasion's the worst, I believe. Avoidance is in the middle, but minimizing taxes, you're allowed to minimize your tax, but I don't know if that's evasion, if that's going to keep it off your reportable income. I'd say that might, I don't know if it's illegal to do that, but it's probably illegal not to report it on your own income tax return. David, do you want to quickly comment on that?
Yeah. So the IRS believes in constructive receipt. So if someone's making a payment on your behalf, the IRS sees that as you receiving the payment or constructively receiving the payment. And, of course, the benefit is your debt gets paid. That's a good question.
But that's the answer that we, unfortunately, there is no loophole there, Tom Newman, but I don't think it's illegal to do that. I think it's then maybe, right. But you can not illegal, but it is still your income. What's up? Deep value investor, Brent Wire in the house says, nothing like a nice Saturday night, good margarita, and Jay Lee on the big screen. Good to have you, Brent. Lapper, what's going on? Aaron Yitz in the house. Good evening, Yitz. Tom Newman, you'll never catch me alive. Very good. And Yitz says, yeah, the IRS is watching. Well, it's funny because I asked David the other day, I said, what do you think the chances are that the IRS is actually poking around social media looking for sports card collectors, dealers, flippers, whatever, to come at? And let's just skip right to that, David. What I'll let you respond. What do you think the chances are that the IRS is looking at our industry, but at the levels like where card show vendors are at? They might, there might be people looking at bigger things, but what do you think is going on as far as your average card show vendor?
Yeah, that's a great question. I wouldn't put it past them, but I'll say this, that the IRS's budget is, as the Taxpayer Advocate Service says, significantly underfunded which is sort of a good thing because they're overworked, overstaffed. You call the IRS, and I call them on the practitioner line. People call it, taxpayers call them on the general helpline. And you hear dogs barking in the background, birds, chirping, and they're all working from home, and their budget's been, severely cut over the past few years, and Congress just won't fund their budget, which is actually a good thing for taxpayers. But I wouldn't put it past them. They have a lot of information on file. Probably about 20 years ago, I had a client get audited, and she, first thing she asked me was, "Do you know that your client is still married?" And so that threw me for a loop. She never mentioned her being married, and she was able to look up the marriage certificate. She said, "I know that she still owns this Jeep and this trailer and whatnot." And so she had a lot of information about her, and this was 20 years ago. So, number one, I'm no snitch. I don't work for the IRS. I don't turn people in, but I can look at anyone's, Twitter page or Instagram page and find out, you can find out pretty quickly they're selling multi-$1,000 cards, and I go to look at their return if I'm the IRS, and, there's no other income being reported besides their W-2. That would be pretty easy to put those two together, but they just don't have the budget to do that. There's no possible way, not unless they can really build a fraud case against you. It would be very difficult for them to do that. So
on the one hand, you're kind of saying you wouldn't put it past them, but on the other hand, you're saying they're most likely not doing that right now. And of course, it's important to note that this is not tax or legal advice or anything like that. Do not take anything we're saying to be, to be advice, I guess. It's hard to, I kind of stumble when I say that because we are kind of looking for some advice here as well, David, but I think we're looking more for, let's call it guidance or just information versus actual advice. You mentioned you don't work for the IRS. You are an EA. Now, EA is a designation that I have to admit, as a Canadian, we don't have that designation up here. I was not familiar with it. I'm familiar with the CPA designation. That's what I hold. And it's more of a generalized accounting designation, and you can specialize in tax or financial reporting or a multitude of different things. Can you tell us, for those who may not know, and I'm guessing most Americans do know, but what is an EA and what's the key difference between an EA and a CPA? But tell us first, what is an EA?
Yeah, so an EA is basically a poor man's version of a CPA. Sorry, I'm kidding. I like to poke fun at the profession because
at your own does it. That's okay.
Exactly. I like poking fun at myself too. So there's always this chatter between CPAs and EAs, like, well, you don't have our credentials. But an EA, the designation has been around for 140 years. And, its first original purpose didn't have much to do with tax, but it sort of evolved into that. But what an EA is it's somebody that's licensed by the U.S. Treasury to represent taxpayers before the IRS. And what that means is if you get an audit examination, collections, appeals, we can represent you before the IRS in those. In that regard. And also, an EA is licensed to prepare taxes and give tax consulting. The one limitation I'd say we have, is, we can't certify, or audit financials like a CPA can, which a lot of CPAs don't do that any longer. Also, we're licensed to operate in all 50 states. Typically, a CPA is licensed in their particular state or states. That's really the only difference. We focus on tax consulting, and IRS tax representation. CPAs, a lot of them do tax as well and tax representation before the IRS, but a lot of them focus on accounting and whatnot. So
yeah. Okay. That lines up with, because I did a bit of research into it. I looked into the difference, and what I discovered was, as you said, the key difference is that the EA cannot sign off or represent public companies, which is fine, because that's the worst work going out there. I mean, listen, as someone who's done that working on public companies is the absolute worst as far as being an accountant goes.
Well, you know what's funny about that is I wanted to actually be a CPA, and I looked at the course that you'd have to take, and it wasn't that it was too challenging to pass the test or anything, but you start out at a big 5, or whatever it is, big 3 now. There's maybe big 1 left now, and you're working with multi-million, billion-dollar revenue companies, and then you go to the other side and you start, maybe hang up your shingle and you prepare returns for regular taxpayers. And it's so hard to scale that down. Okay, I'm used to billions of dollars in revenue. Now I've got to scale it all the way down to, Joe's plumbing that, grosses $300,000 a year. So anyway.
Yeah, it's still not the end of the world. I mean, it's I'd prefer that as a practicing accountant myself at this point in my career, but hopefully I don't do any more of that moving forward anyway. Okay, I want to ask you this now. We're going to get in some tax questions. I'll keep my eyes on the chat, guys. You can put your questions in there, but I think we'll probably we'll try and mix it up, go through some of mine, some of yours as they come in, and hopefully we've got most of the pertinent questions already sort of lined up to go. So let's start with this one. At what point, David, do I, as an American taxpayer, at what point do I need to report my card sales revenue to the IRS on my 1040 tax return?
Yeah, so the IRS position would be $1.
$1, everybody. $1.
That's right. Yeah, it's a shame, but there's an important distinction in, is this a hobby? Is this a business? I would categorize a hobby as, you're purchasing cards casually. You're not doing it in a regular way, and perhaps you're not even making money at it. And then that's important to note, because an IRS considers a business to be ongoing, what they call regular and continuous. And so, you do this for 3 months and then you quit forever. I mean, was it ever a business? But if it's regular and continuous, you're spending 4, 5, 6 hours a day, scrolling ComC and eBay, and you're going to card shows and you're setting up booths, and, that looks more like to the IRS that you're actually, a functioning business. But yeah, we're obligated as U.S. citizens to report all the dollars that we earn, unless they're specifically exempt under the code. So I know that's not a answer most people want to hear, but so it's the thing is it's voluntary. Who's going to report that Jeremy goes to a card show and he sells a card for $500 to some random vendor? Who's reporting that income? And so the IRS relies on people volunteering this information, which is kind of scary, but so it's sort of an honor system, to be honest with you, until you get that 1099 in the mail. Sorry, I didn't interrupt you.
Yeah, no, that's it's such it's not a gray area, because it's quite black and white as far as the tax code goes, but like you said, who's actually reporting it? And then there's the question of, at what point does it convert to that hobby where you don't really need to report it because it's not an ongoing business, to where it does become an ongoing business? I mean, let's say you set up at one show a year for the first 5 years, and you sell $8,000 worth of cards and you buy $8,000 worth of cards. So it's a wash in your mind. At what point do you need to start reporting that $8,000 of revenue? And you're saying, well, at $1, if you're doing it right. But the way tax systems are set up in the US and in Canada, like you said, it's a voluntary reporting system in the US, which I understand. In Canada, we refer to it as self-assessing. We assess our own tax, and then we send the return in to the CRA here, which is our version of the IRS. We send it to them, and they reassess it. They assess what we've assessed. They assess our reporting and decide if they agree with us or not. And if they don't, then they have the power to come in and kind of, look through your records and that. So I know there's not a clean answer to this, David, but is there a point in your mind when people watching right now who might be casually setting up at the odd card show once or twice a year, and they're not bringing in tens of thousands of dollars, maybe they are, but maybe they're only bringing in, under 5 figures. Is there a point when, if they do that year after year, that their accountant would advise them to start reporting that income?
Sure. Yeah, absolutely. And like I said, there's no dollar amount that triggers that. It's just the fact whether or not you're actively in this business on a regular and continuous basis. So yeah, there's no minimum, let's say.
Is regular and continuous one, every July at the national? Is that regular and continuous?
That's a good question. There was a court case about, I don't know, 15 years ago or so. And this guy, he was washing windows and he received a 1099 and he reported it as other income. Well, in the United States, you receive a 1099 miscellaneous. Well, we used to do the miscellaneous. Now it's called an NEC, non-employee compensation. But if you receive a 1099, it says non-employee compensation, that triggers the IRS to think, okay, we've got self-employment tax to pay. Well, he reported his other income. They audited him and he said, look, this was a one-time thing, never, ever going to wash windows again. It was a significant amount back then. It was about $15,000 is what he earned. And the IRS sided with him because it wasn't regular and continuous. And that is not defined. Goes back to, flipping houses or even flipping cards. If I do 6 a year, is that regular and continuous? If I do 700, is that regular and continuous? It is not defined, which is very frustrating. There's a lot of the code that isn't nailed down and defined. So you just sort of have to use your best judgment, go see a professional, let, you and he decide, or you and she decide what's the best route to take. Always try to err on the side of caution. So like I said, I don't work for the government, but I am going to err on the side of the caution because, I don't want to put my clients in harm's way.
Yeah. I mean, you don't work for the government, but you do deal with them when you're representing your clients in front of the IRS. So you're a great person, definitely a great resource. I wonder, is the best advice that we could give here tonight, or guidance, because maybe we don't want to use the word advice, but is some of the best information we could share to anyone who's wondering, is to get an accountant, to spend that money and invest in that, to make sure you have your business in order, and to make sure that you are minimizing the risk of audit?
Sure, absolutely. Especially if you're operating a business, or even if you own a rental property or something like that, I would absolutely recommend that. And there's professionals out there that prepare returns that aren't licensed, if you can believe that. So in our country, you could be a high school graduate, you could be a high school dropout, and not have a license and still prepare returns. So you want to make sure that you meet with somebody that's got a professional designation like a CPA or an EA. I can almost guarantee you that, if the guy's got a brain in his head, more than likely he's going to save you more than what you're going to pay him in consultation fees, tax preparation fees, and maybe even save you a lot of headache and heartache down the road, and maybe even tell you, give you some ideas on how to avoid an audit in the first place. Audits are pretty rare. We have about a 0.2% rate of audit where the IRS actually wants to sit down and go over the return. So yeah, absolutely. I think it's definitely worth meeting with a professional, at least to get some advice as to how to set this up properly, how to keep great records. Maybe you're missing some deductions. Yeah, absolutely.
I mean, deductions are the key there. And I want to just say hello and good evening to Turpin Forcer. Says, I wish the Edmonton Oilers were playing like this the whole finals. Yeah, they're up 6-1 against Florida, but they're down 3-1 or 3-0 in the series, maybe 3-1, probably 3-1 after tonight. I wanted to ask you this question too, David. There's been a lot of chatter around the hobby about eBay issuing 1099s to its users, its US based users. what can you just, kind of quickly, if you can, tell us what does that mean when somebody receives? I actually no, don't. I think people understand what a 1099 means. It's basically telling you how much money you sold, how much money worth of cards you sold in the year. Is that yes or no? Is that what it is?
That's pretty spot on, yes, sir.
Pretty spot on. And I think a lot of recipients of the 1099 think that they are now going to be taxed on the amount that is reflected on that 1099. But what a lot of people don't seem to realize is that there's deductions that you can take against your revenue. That's top line revenue. The 1099 is top line revenue. You can still deduct expenses incurred to earn that revenue, including your cost of goods sold. So can you just expand on that briefly? And then we're going to bring Leighton Sheldon on for the Vintage Spotlight segment. I know you have a question for him, and maybe he has one for you. But if you could just address that last question.
Yeah, so that's why I was trying to make the point of why it's important to distinguish a hobby versus a business, because in a hobby, used to be you could take your expenses up into your income and just sort of wash it out. The laws have changed a little bit to where the IRS is or Congress has sort of neutered those expenses that you can offset hobby income with. So if this is a regular continuous business, the IRS will allow you to deduct your expenses, what they call ordinary and necessary expenses, to reduce your self-employment income. Just real quick, I don't know if you want to talk about the 1099K issue. You may not be familiar with it, but a couple of years ago, the IRS, Congress, they passed this American Rescue Plan, which is kind of weird phrasing, but they were going to force third-party payers to send out 1099s to anyone that has used a third-party payer like Venmo, PayPal, eBay, if their sales were $600 or greater, actually $601, let's say. Old law said, you won't get a 1099K unless your sales exceeded $20,000 and over 200 transactions. And Congress brought it all the way down to $600. Everybody freaked out. And so they put that on hold. And so starting in 2024, which means 2024 filings in January of 2025, if your sales exceeded $5,000 from one of these third-party payers, they're saying that you're going to receive a 1099K until they eventually phase that all the way down to $600. So if you're using PayPal, Zelle, Venmo, Cash App, Upwork, Fiverr, just to name a few, Facebook Marketplace, and you've got sales greater than $5,000, you can expect a 1099K. And 1099K is very similar to a regular 1099. It's going to report those gross sales. And from that, you can deduct, like Jeremy said, your cost of goods sold, all of your other expenses that are related to your business.
So now I think it's important to mention that the 1099, the issuance of the 1099 is not what causes your revenue or your income to become reportable. Sorry, it's not what causes your revenue to become reportable and your income to become taxable. It's simply a form you receive that is a copy of which is also sent to the IRS. So now the IRS and you, the taxpayer, have the same information. And if you don't report it on your tax return as revenue, the IRS is going to notice that, and then they might come knocking. But that's not all taxable because, as you said, you get the deduction. So that's number one. The other sort of nuance of this, David, is just because there's a threshold to send out a 1099, does that threshold mean that you don't have to pay, you don't have to report that income if you do not receive a 1099, or do you still have to report it even if you don't receive the 1099?
So nobody likes to hear this, but yes, you still have to report the income regardless if you receive 1099 or not. So a prime example would be, like, let's say a plumber. I'm picking on the plumbers tonight. So, plumber goes to your house, he performs service, he pays, he charges you $700 to, put in a $5 part, and you're not going to give him a 1099. If he's performing services for a company, that company will give him a 1099. But he could do that, 1,000 times a year and, generate a large amount of income that's not reported at all to anybody or from anybody, especially if he's dealing in cash and checks. If he's using a credit card service, of course, that's different. But yeah, IRS, they don't have any distinction whether or not, whether or not you receive a 1099 or not. They expect you to report the income, unfortunately.
Yeah. Got it. So the 1099 is not what causes you to have to report your revenue. It is just the document that gets sent to you and the IRS. So make sure if you get that you are reporting, or you could be asking for some trouble, right?
Right.
Okay.
Yeah. And these 1099Ks, they're going to be really tricky this year because, I think in Venmo or Cash App, I don't use either one, to be honest with you, but or Zelle, you can choose, is this a service or is this friends and family? So you live together with 3 other people and you're splitting rent or whatever, utilities, you're going to give this person $300 a month for your share of the rent. You could choose the friends and family option. And so the third party merchant is supposed to ignore that and not report that to you as income. But I can see that getting screwed up quite a bit. So just be on the lookout for that. Look out for random 1099s this year. There's going to be a lot of mess and confusion probably.
All right. Okay. So Vintage Card Collector says tax implications are one of the reasons that cash is king at card shows, because it's easier to hide that from the IRS. Chad Shipper, happy Saturday to you as well. Terp Enforcer wishes all the gentlemen in the room a happy Father's Day, as do I. Clay Phillips, good evening. I think it's a great topic as well. Mark Santucci, what's going on? Welcome to the show. Terp says the government always wants a piece of the pie. They want you to report everything. Yes, of course they do. And that's written into the law anyway, I believe. Okay, go ahead.
No, you go ahead. Go ahead. Sorry.
Okay, we're going to bring Leighton on. Leighton, are you ready to go? He's ready to go. Let's bring Leighton on for what we call the Vintage Spotlight segment. Leighton, welcome to the show. Please meet David. David, please meet Leighton. Say hello, guys.
Hey, David.
How you doing, pal?
Great, thank you.
Nice to meet you.
All right, good. Welcome, Leighton, to the show. We've got a bit of a special episode here, or version of the Vintage Spotlight, guys. We're going to start with the questions, and then Leighton and I have a bit of sort of an announcement, I guess you could call it. So let's start off. David, did you bring a question for Leighton?
I did. I was wondering, and I'm sorry if this has been asked before, but which card in your collection has the most sentimental value to you, and what makes it the most special to you?
That's a great question, David. I think, we've asked it maybe once or twice over the years, and certainly there's a number of cards that came to mind, and you were nice enough to actually email me this question, so I have been pondering it. And I really think I would have to answer the 1934 Gaudi Heine Manouche. And the reason why is, so my dad, like many card collectors who are living in the New York area growing up, my dad had a lot of cards, Topps and Bowmans. He doesn't know what happened to them. And he doesn't actually know, David, how he got these 4 Gaudi cards from 1934. But when I was about 11 or 12 years old, my dad was cleaning out his desk in the basement. We live in Manalapan, New Jersey. And he comes upstairs like he found gold. He's like, wait, look what I found. He found 4 Gaudi cards from 1934. There was 1 Hall of Famer. I got 2 cards for my bar mitzvah. My brother got 2 cards. I still have that same Heine Manouche. And even though it's not probably worth more than $60 because of its condition, it has a lot of sentimental meaning to me. And it really got, I would say, me interested in vintage cards. And the fact that they're out there, like this card opened up my eyes to so much. Very cool.
Very cool. Leighton, do you have any sort of questions for David? I mean, this is the tax topic. You're a businessman. I mean, you're reporting income to the government. And does anything you heard leading up, or did you come with any sort of questions you had for him?
I do. I don't have so much a question for me, David, and the reason being, I just want everyone to know out there. So I've been doing this full time for, about 20 years, but I have a bookkeeper and I have an outside accounting firm. And so I take it very seriously, the way that you're talking about, David. But the question I have is actually for the masses, and it really just want to keep it easy. And for example, I caught the last few minutes, the few minutes before I came on, I caught that, David. And I really like the direction you were going. So I don't know if I got everything, but I'd like to know on behalf of the collectors, that are going to be going to the National Sports Collectors Convention. So let's keep it easy. People are going to be paying a lot of money, David. Hotels, meals, rent-a-cars, flights. So remember, we're not talking about my business or other businesses that are incorporated. But is there a piece of advice you can offer collectors? Because you're talking about now, hey, if they sell on eBay, if they sell even on consignment through auction houses, they're going to get a 1099, which makes sense. But if you are making an income, logic tells me, remember, I'm the son of an accountant. My dad's a CPA, but I am not. I don't pretend to play one on TV either. And so my question is, for all the people that are going to the National that are doing it for real, meaning they're incurring those expenses I just mentioned, is there any advice we can offer for the folks who are watching this either now or on playback, David, about keeping the receipts, about anything at all in terms of organizing their expenses so that they can somehow maybe use some of that to offset their profits and gains at the end of a particular year?
Sure. Yeah, that's a great question. So if Iris says if the intent of the travel is for business purposes, then you can secure those expenses for, to offset your income. And those expenses would be like, say, your flight, or maybe your miles if you're driving to and fro, any local transportation, meals, of course, the event tickets. And then you also want to track your expenses whilst you're at the show. If you're purchasing inventory to resell, of course, you want to have record of that. I don't know what kind of record keeping they have at the National. If each vendor is different, I imagine they provide some kind of a receipt every time you purchase something. But yeah, so if your intent is to, if your intent is either gain more knowledge about the hobby, or secure inventory to resell, and you're there for a business reason, then yes, you can deduct those expenses going to and fro. And people always ask me, like, do I really have to keep receipts? I mean, that's so old school, right? I've got a buddy, he's got a construction business. He said, "You really want me to keep receipts, Dave?" He said, what about bank statements or credit card statements? And I'm like, those work well, but picture yourself in an audit with a bank statement, and that's all you've got, and no receipts. Right. And okay, so let's pick on the plumber again, right? So you got a plumber, and he's got a bank statement, and he's got 400 transactions at Home Depot, 300 transactions at Amazon. Okay, well, you could buy about, I think Home Depot's got about 1 million different SKUs. You could buy a washer and dryer. You could buy parts for your business. You know what I mean? Amazon's even worse. 10 million different products to choose from. What did you buy? Did you buy something for yourself? That's why you have to keep receipts and bank statements and credit card statements. And there's more than one way to prove your travel, by the way. And if I'm talking too much, just cut me off. But so if you didn't have, let's say you didn't have your hotel receipt, and you couldn't prove that you actually stayed at a hotel. There's other ways you could prove that you were actually in the state of wherever you're going. So if you're traveling from New York to Cleveland, and the Nationals in Cleveland, for example, you could show on your bank statement, I was actually physically in Cleveland. I visited, XYZ place. I visited the Hall of Fame, whatever you do. So you can actually prove you were physically there, so you can actually recreate your expenses. I mean, Iris has a brain too, and they use common sense, so they know these things. So even in the absence of records, you can reproduce expenses.
Yeah, good information there. Go ahead, Leighton.
Yeah, I was just going to say, David, I really think that this is a wonderful episode. I'm glad Jeremy got you on here. Keep in mind, I'm not a professional doing this for a living, so I'm going to do my best to recapture what you just said for everyone watching, David. But I think it's really important. So effectively, gang, if you're a collector going to the National, just because you're a collector, it doesn't mean you can't deduct your expenses. And what I'm trying to get to is what David just said. If you're going to end up getting a 1099, if you're going to have a profit on your hobby, you're allowed to take these expenses that were legitimately incurred. And even if you bought a card for your collection along the way, it doesn't mean you can't deduct your expenses if the primary reason for you being there was business purposes. Am I right, David?
That's right. That's a great point. So, if there's a card convention in Hawaii, and, you like to go to Hawaii, but your primary purpose is to go to that card convention in Hawaii, and you just so happen to be in Hawaii and enjoy yourself for an entire week, because that's how long the convention is. Why are you there? Primary purpose is to go to that convention. If I have a good time in the meantime, so be it.
Yeah, that's why I'm considering going to a convention next year in London and Sweden.
Yeah, absolutely. Especially if you want to expand your business, go global, as they say, right?
Absolutely. You want to be multinational.
That's right.
All right. Good. Okay. So I alluded, we have just something that Leighton and I want to let everybody know about. Leighton, I'm just going to jump right into it, guys. So for the past, we've been doing this vintage spotlight segment since I believe it's over a year and a half now. Leighton's been coming on most Saturdays for the vintage spotlight segment. We are really excited and somewhat proud to let everybody know that we are now spinning off the Vintage Spotlight into its very own podcast and YouTube channel. So we're pretty excited. We've been planning this for a couple months already, guys. And I'm going to share with you right now on the screen. There you can see the Vintage Spotlight channel on YouTube. That's what it looks like right there. We have 2 subscribers so far, because that's probably me and Leighton as the 2 subscribers to the channel so far. And we just published our first episode today. It's this one right over here. The very first episode of the Vintage Spotlight is on YouTube. It's also available on all the podcast platforms. Leighton, anything you'd like to mention to everybody about this and just sort of how excited we are about? And I have to say, we're excited, but for me, it's kind of really cool because it's a spinoff. Like, you see spinoffs on syndicated TV shows. You don't necessarily see them on YouTube shows within our hobby. So I think it's kind of funny and fun that we have now a spinoff from Sports Cards Live because of the Vintage Spotlight segment. And we're excited about bringing you guys content that is specifically vintage. Leighton, why don't you let them know a bit about your thoughts and the frequency upon which we intend to drop episodes?
Sure. So first off, really excited, as Jeremy said, and very proud of this. We've been working on it for a few months. We did just drop our first episode. We'd love to hear your feedback. The primary reason that we're doing it is because we feel that for the few minutes that Jeremy has me on his show, I'm always talking super fast. I feel like I'm not, able to get everything out that I'd like to talk about. And in terms of the first episode, we're really giving you a flavor for how we're going to structure it. And it's really going to be focused not just on vintage cards, but really what's going on in the market. We're going to be offering you some advice, some fresh takes, and really just a lot of fun stuff in general. And of course, if you have any questions that you'd like to see answered about vintage cards, we'd love to do that for you. We plan right at the moment to be taping a new episode every other week, and we'll just see what everyone thinks about it. We're very excited.
Yeah. So thank you everybody for just enjoy. And I've got great feedback on the Vintage Spotlight segment during Sports Cards Live. So I knew that there was a demand for it and that there would be some appetite. So grateful. I see a bunch of people saying that you're subscribing right now. We're both, I got it. Like, very grateful. The plan for us is to upload the episodes to both Sports Cards Live and the Just Collect YouTube channels as well, to try and bring some attention to it. And over time, eventually, we'll probably stop that and just let them live on the Vintage Spotlight YouTube channel, which we want to grow. We want to make it its own thing. It's a 50-50 sort of podcast between Leighton and I. And so excited, and thank you anybody and everybody who's been subscribing to it. Leighton, before we let you go from the segment here tonight, I'm just going to run through some comments on. So Vintage Card Collector has subscribed. Thank you, Vintage. Edmonton won the game. Thank you. Mark Stukes has subscribed. Thank you. Chris says it's cool. Thank you, Chris. Jake Dahl has subscribed. Grateful for that. Thank you, Jake. Michael Ham in the room, everybody. Billy Ripken Silhouette. No, that is not the Billy Ripken Silhouette LGC. That's more like Mickey Mantle. Like Mickey Mantle. Bob Boozle, congrats on the expansion. Let's hope this spinoff lasts longer than Joni Loves Chachi. Not everybody would know Joni Loves Chachi, but Bob Boozle, I sure do. That's right up my alley from when I was growing up. Jeff McMahon, congrats on it. Looking forward to it. Thank you, Jeff. Mookie, congrats. David, do Jeremy and Leighton now have to file jointly?
Absolutely.
That's hilarious. That's hilarious. Oh gosh, Mookie, great one. Great one right there. The professor wants to know, does that mean that Sports Cards Live will not have its own Vintage Spotlight segment anymore? It does not mean that, right? Leighton, you still want to come on and do this, right?
No, we talked about it, and I'm still going to try to make as many of the Saturday nights as I can. And really, as Jeremy said it very well, I'm so appreciative and grateful, not only for the year and a half or so that I've spent on Jeremy's show, like this little piece we call the Vintage Spotlight, but just really appreciative and grateful for the community. So we would appreciate if you check it out and let us know your feedback.
Yeah, for sure. Robert Scott subscribed. Thank you. Joe Perot subscribed. Thank you, Joe. Professor says, why a baseball logo man and not a hockey player? Well, we went with what's most recognizable. But Leighton will tell you, when we were playing with the imagery, I was not like I was too firm, right? But I was like, we need hockey on that. So when you look at the video itself, we do have some faded out cards along the bottom. You'll see your share of hockey down there. Michael Ham, thank you for subbing. Thank you, Jeff Hart. Thank you, Tom Newman. Chris C is subscriber number 10. Thank you, Orlando. Welcome to the show. And yeah, the Oilers are up 8-1 now. Very cool. So yeah, they need to win one. So that's our big news tonight, guys. The Vintage Spotlight segment is now spinning off to its own podcast on YouTube and everywhere that you get your podcast. So please do all those things. We're very grateful as we grow that. All right, Leighton, good to have you back. I look forward to hearing what people think about our first episode, and time to get back to tax talk. So Leighton, thank you, man. Thanks for everything.
Thanks, Jeremy. I know you're a dad. Happy Father's Day to you. David, I'm not sure if you are. And for all the dads that are out there, I hope you have an amazing day with your kids tomorrow. Take care, everybody.
Thanks, Leighton. Happy Father's Day, man. Happy Father's Day to you as well. Turpin Forcer is subscribed. Cards in the Buff. Thank you, guys. Thank you so much. Really, really cool. All right. Let's get back to tonight's program. David, thanks for sitting through that. But we've had just happened to be tonight, and we have a lot still to get through when it comes to taxation, where we might go into overtime. I do have an after hours episode scheduled for midnight Eastern here tonight, guys. So hopefully we get through everything with David. So let's go to some questions that have come now in the comments, David, that have come up. So I'm just going to go through them in order. Lucky K says, is it somewhat standard that buyers give cash for cards at shows? Yeah, somewhat standard, Lucky. From a buyer's point of view, what is the minimal documentation they should be doing to justify the transaction as an expense? So first of all, David, I think it's a fantastic question by Lucky K. I just want to clarify before you jump in. He says here, as the question reads, what is the minimal documentation they should be doing to justify the transaction as an expense? Well, I don't know that that's an actual expense as much as it is the purchase of an asset, which becomes inventory. So stating that, because expense is deducted immediately, where when you're buying inventory, you typically deduct the cost of it as you sell it. And this is something I asked David a few days ago was, do we have to be on what's called the accrual basis, or can we be on the cash basis, which would be deducted as you spend it? So David, thinking of my cash versus accrual accounting question to you, as well as Lucky K's, the mic's over to you. Please address.
Sure. I could point everybody to Regulation 471. They just released some guidance on that a couple of years ago. It's about 101 pages. So real quick, I could talk for about 2 hours just on this.
And just so you know, David, we have a lot of questions, so we got to try and be as quick as you can on everything. From here on in. Yeah. Stick to the point.
Yeah. If you track the cost or the value of your inventory, if you keep track of that at all, then just like Jeremy said, you've got to track your inventory on the accrual basis. So you could still use the cash basis for income and other expenditures, but not for inventory. So, you at the end of the year, you buy $10,000 worth of cards. They haven't sold until January or February of next year. That cost of goods sold is not recognized. That expense is not recognized until it's consumed, which means your client or customer buys that card from you. So you have to track the cost of that asset. So yeah, you're right. It's not an expense when you buy a card that you're buying to resell. So it's a balance sheet item. It's an asset, and you have to track the asset till it's sold.
And at the time, so if you are really staying on top of your sports card ins and outs, every time you buy a card, you know what you paid for it. Now, I had a question that came in. Oh,
Jeremy,
go ahead.
real quick, I'm sorry. He was asking minimal documentation.
Yeah.
Everybody's got a smartphone. Hey, take a selfie with the guy that you bought it from. Maybe have him write you a quick email. Hey, thanks for your purchase at the show. You bought XYZ, card number, year number, make, model, all that good stuff. This is the amount you paid. Handwritten receipts, something. I mean, you paid cash, so there's no movement. Maybe go to the card show if there's an ATM there. Maybe show that you have your ATM receipt, picture with the guy. Here's an email from the guy. Something like that would help.
Okay. No, thank you. That's great. Now, I had a question that came in from Cajun Cardboard. I'm sure a lot of you guys watch the Cajun Cardboard YouTube channel. So Brian sent me a question, and his question was, and this is on point here, David. He says, if you buy a big lot of cards, say 1,500 raw cards in one lump sum, how do you establish a cost basis in each of those cards to calculate your eventual profits? If some you grade, some you don't grade, some you sell, some you keep. Based on what you've said, my own personal understanding is that you just need to keep records. So when you buy, and let me ask you, does this make sense to you, David? If I buy a 1,500 card lot for $100,000, should I go through that 1,500 cards and assign a portion of that $100,000 purchase price to each and every card? Or should I divide 100,000 by 1,500? Even though some cards, there might be one $90,000 card and $110 cards in there. So that doesn't make sense. So how do you handle these bulk purchases of inventory?
Yeah, the simplest way would be to, of course, divide the total price by the number of cards, right? But if you're paying $100,000 for a lot, and one of those cards is worth, you and the seller know that card is worth $15,000. Maybe you and the seller come to an agreement and put it down on paper. These are the items that I bought. I bought XYZ card for $15,000. This one was 5, this one was 2, this one was 3, whatever it was. And the rest of them are just commons. And so we're just gonna apply that value, whatever remains, to those commons. So, and I think that's an acceptable practice, especially because you can establish fair market value of a card. They're almost like stocks these days, sort of, in that you can see comps, via CompC or eBay or other related sales. So if you could pull that data together and figure out what those comps are at the time of purchase, I mean, that's your best evidence.
All right. LGC says, can hobby gains and losses be considered gambling wins or losses in the US and or Canada? I think let's just answer that one simply. Like, that's a yes or no question, I would say. Is it gray?
Hobby gains or losses be considered gambling winnings? No, that's two separate things, I'd say.
Because gambling is regulated. This is not regulated. So the CRA in Canada, the IRS in the US would say, well, no, because it's not regulated. So it is certainly not gambling in that manner, even though a lot of people do gamble find ways to turn the hobby into gambling. Jeff's card journey. What about a collector who sells $1,000 worth of cards once a year and gets a payout from an auction house? Will that generate a 1099 being issued from the auction house? And I'm ad-libbing a little bit to that.
Yeah, that's a good question. If they issue 1099 miscellaneouses, like what they call other income, box 3 other income, it's possible because it exceeds $600. If they're using these new laws and they use a third-party payer system, merchant card system, then it's 1099K is what they're going to issue. That would not meet the threshold under current law, but eventually, more than likely, down the road, probably 2025, 2026, you would receive a 1099. So I'm going to say maybe on that because I don't know exactly what they're reporting, what kind of 1099 they'd be reporting. So You just want to be prepared to receive a 1099, I'd say.
Be prepared to receive it. Yeah. I mean, the rule of thumb here is everything you sell is reportable.
Well, not only that, but not a lot of these companies know what to do or how to do it or what to report. And so a lot of them err on the side of caution. So even if it's a 1099K they're supposed to give you, I've seen a 1099K for well under, 200 transactions and $20,000. I mean, they're going to err on the caution because they're on the side of caution because they have a cautious accountant. They're going to send the 1099 more than likely.
But again, whether or not you receive a 1099, that revenue is still reportable. Whether or not you receive a 1099 is not what makes your revenue reportable. It's just a slip that tells you earned it. Jeff Hart says, and we've answered this already, I'll read it anyway. Should cost of goods sold be matched up with revenue for each item as a good practice? I mean, that's an easy yes. That's a slam dunk yes, right, David?
Yeah. And you mentioned card grading too. So if you buy a card for $10, you get it graded, it costs you $15. You ship it for another $5. You've got shipping materials for another $5. All that adds to your cost of goods sold for that particular item.
Yeah. However, when I purchase shipping supplies, and I report my stuff, when I purchase, I'll buy 200 bubble mailers at once for $80. I just deduct that all at the time I buy it. I'm not amortizing the cost of each bubble mailer through my income statement. You know what I mean?
Jeremy, you got to do this right, man. Every stamp. No, I'm just kidding. Okay.
Yeah. That's fair. Supplies, you just write them off.
You can, yeah. If it's if it's non-incidental, yeah.
This next one from PSA 10, I don't know if this is a tax issue or not. I'll read it out anyway. What about the legal requirement to report that someone gave you more than $10,000 in cash within a year? Is that a requirement that's laid upon the common citizen, or is that more on financial institutions and other businesses?
Yeah, I'm assuming this is a gift he's talking about, like somebody gives you money, not for a service rendered or.
I don't think that's what he's talking about. I don't think he's talking about a gift. But listen, if is this a question that you're qualified to answer?
Yeah, sure. I'll do it two different ways. So Jeremy, I can turn around and give you $1 billion tomorrow. I'm not going to do that, and it's tax free to you if you're a U.S. citizen. I mean, the recipient of a gift never pays tax on a gift. If he's talking about cash, what's the legal requirement? I mean, $10,000 or greater in cash is supposed to be reportable if you go deposit those dollars in the bank, or let's say you go to buy a car and it's $12,000, you give them cash. They are obligated, and the bank is obligated to report that. Legal requirement to report monies that you were just received as a gift. There's no requirement to report that income as a gift.
Yeah, and he does clarify here. This is for commerce, not gifts, and that's what I figured. PSA 10, yeah, for sure. Okay, back over here. Rich Benedictson, if you open a box of cards that, let's say, has 500 cards in it, one card is valuable. In that is the basis of the card or the box. Okay, I'm going to read this as it is. I don't know if I understand. If you open a box of cards that, let's say, has 500 cards and one card is valuable, in that is the basis of the card, the box price of 500 or some other allocation. I'm seeing what he says. You can never have basis higher than what you paid. So if the rest of the cards end up in the garbage because they're worthless base, all the cost, all that 500 will go towards the one big card you pulled. And when you sell it for $1,000, you'll have $1,000 revenue, $500 of cost of goods sold for $500 of taxable income, or, minus other expenses later on. But is that fair, David?
That's fair. Right? The best way to do that is, and nobody wants to hear this, but just get with the seller and figure out that allocation together, and maybe
Sorry, David. I think what this is, I go to the LCS. I buy a box of National Treasures for $500 or $1,000. Gotcha. I open up that box. Is the cost of opening wax deductible when I open the wax? Because now I've changed it from a sealed box to singles. Does that trigger me being able to deduct the cost against all my other hobby revenue, or do I have to wait till I sell those cards to deduct that cost of the box?
See, that's a great question. Let's say there's 500 in the box. One's really valuable. The rest are trash. If like Jeremy said, if you're tossing those in the trash, I mean, obviously you spent the $500. We get that as your cost of goods sold. But if you keep the other 499 cards in your collection for personal use or give it to your kids or whatever, that's a bit different. You technically can't deduct something you're keeping personally. It has to be able to be resold to your customers. So yeah, that's a tough one.
Oh, great. Okay. Thank you for that. And Space 99 Yak with a $4.99 tip to the host. Appreciate that, Space 99. Thanks for being patient. Space 99 Yak asks, are the taxes you owe from your W-2 job and the money you make from card sales taxed separately or combined? And if you lost money on cards, well, yeah, this is great. If you lose money on the cards, will that affect your W-2? And I think it does. The W-2 is fixed. It's not going to change your W-2. But the real question Space 99 Yak is asking is, can I deduct card losses against my W-2 income?
Sure. So if this is a regular and continuous activity, this is a real business activity, not a hobby, and you have a loss, and you suffer a loss in your business, that loss will offset or reduce your W-2 income. It's actually the most powerful deduction that you can have is a business loss, as long as it's legitimate, of course, because that will reduce your investment income, your rental income, your W-2 income, passive income, investment income, active income. So, yeah.
All right. Great stuff. Thanks, Space 99 Yak, for the question and for the tip. Really appreciate it. Vintage Card Collector says, how would the IRS ever prove your cost basis on the sale of an item that you bought in cash? Seems impossible compared to stocks where cost basis is easy to identify because you're doing it through a third party. Right here, it's cash. So please go ahead, David. It's a I think this is a great question, one that a lot of people are probably wondering about.
It really is a great question. So it's not up to the IRS to prove your cost basis. That is something you have to know. Court case a couple of years ago, real fast, guy couldn't prove what he paid for a stock. And so the IRS assessed him with, a gain on the entire sale of the stock. And he went all the way to tax court and provided no proof whatsoever. I mean, zero evidence of what he might have actually paid for the stock. And so his cost basis was zero. Tax court said, sorry, you have no substantiation. You have no proof, no documents, he made zero effort, didn't even hire a tax attorney, and you go to tax court. So it is not up to the IRS to prove or disprove what you paid for that item. If you provide zero records, zero basis of substantiation, they're going to give you a goose egg. So you want to keep excellent records. I mean, that goes for any business. You want to keep excellent records, best you can, photos, handwritten notes, affidavits, whatever you could do to get documentation is the best way to go.
Something that I've been doing is when I go to a card show, I stop at the bank first. Especially if I'm traveling, I'll go to the bank. I will pull out cash from the bank so that I have sort of evidence that I took cash with me. And then when I get back home, I will deposit back what I still have. And then the difference I record. Now, I probably don't do as good of a job as I should, like by making up, bills of sale and that kind of thing, because we're moving so fast. But that to me is a little extra detail that I do just to say, well, look, I took cash out on this day, on this day, which was 2 days before I flew to the National in Cleveland, sort of thing. So that's just something. I don't know if that'll help me or not, but it's something that I do.
Yeah, that's helpful. Just to add to that, Jeremy, pay everything else with a debit card. So if you're taking $1,000 cash with you to go to the National, use everything else. Everything else you buy, your ticket, your flight, ticket into the show, whatever, meals. Use your debit card for everything else, and that way you can sort of prove, hey, the only reason I brought this cash was to buy cards, and everything else was paid with another form of payment.
Yeah. Yeah, great stuff. Okay, so Vintage follows up here. He says, dealers at shows will laugh in your face if you ask for a receipt or email when making a cash purchase at a show. It's the right answer, but not practical. Well, here's where the problem comes in, Vintage. And I know none of us do that, right? But here's the problem. if you can't prove to because the IRS, as David said, it's not up to the IRS to prove your cost base, it's up to you. If you can't prove it, well, your cost basis is going to be zero when they assess you or reassess you. So you have to, like, as impractical as it is, or embarrassing or awkward or funny, just know as the buyer at the show, when you end up going to sell that card, if you are being looked at, your cost base will likely be ignored. You won't have one. Therefore, you will pay tax on the total sales price. Now, if you bought that card for 10 grand and sold it for 12 grand, well, boy, oh boy, it's going to suck to pay tax on 12,000 instead of 10,000, instead of 2,000, because you don't have anything to back it up. So while it's impractical, it's not the vendor who's going to pay the price. It's you, the purchaser. David, is there anything you'd like to add or correct me on with that statement?
Yeah, that's spot on. I had a client get audited years ago. He's a mechanic, and mechanics like to buy cars, fix them up, flip them, whatever. And he received cash. He paid cash for the cars, and he received cash. Well, he deposited the cash to his bank account, business bank account, which he's supposed to do. He got audited, and he couldn't prove that he paid cash for these vehicles. I mean, it was unfortunate. I mean, there was no, how do you prove you paid cash for anything, really? I mean, it's very difficult to prove. So picture's worth 1,000 words. Here I'm at the show, I'm going to take a selfie with this guy. He's a card, dealer, and he sold me this card. Maybe shoot him an email and say, hey, thank you so much. I love my, PSA 10, 1952 Mickey Mantle, whatever you bought. And just get some kind of acknowledgement from them. I realize that they don't want to deal in receipts because more than likely, who knows, they may not be reporting the cash. Who knows? But yeah, try to get some type of evidence if you can.
Yeah, that's the key right there. Try to get some kind of evidence. And I know that my guess is that less than 1% of deals at the national will have any type of evidence going along with them. So I just don't know what that leads to down the road. But I think we'll come back to that a little bit later. Quick announcement, everybody. Rage has joined the chat. Everybody, Rage is in the chat. Happy Father's Day, Rage. And appreciate you wishing everybody a happy Father's Day. Thank you, Brendan Ryan, on the great collaboration comment. Appreciate that with the new Vintage Spotlight YouTube channel and podcast, the spinoff of Sports Cards Live. Michael Ham has a great question here. If I am opening products for my own content, can I write that off, David?
Sure. Yeah. If the purpose of opening that product is to, market your business or advertise or just even show what is in the product. Yeah. I would say that's, almost like a display or a sample, so to speak. Yeah, absolutely.
Yeah. And I think it like, now let's just qualify it for a second. Right. Because now, what if you are a collector? You don't do cards as a business. But you're a collector. You show off your mail days on YouTube. You're not generating any revenue. You might not even be monetized if you don't have 1,000 subscribers. I'm not sure if that's still the threshold or not, but you might not even be monetized. So if you are opening up the product, but you don't really have any revenue, it's not really a business. Doing content is not a business unless you're monetized and you're turning it into a business. David, is it still deductible from your other income if you are just doing it for content and that content? Now, what if that content you do earn, say, $50 a month from YouTube revenue or something? Can I make $600 a year from YouTube or Google for doing my YouTube content, but I now spend $3,000 a year to break content, to break product for my YouTube channel. So I make $600 on YouTube. I spend $3,000 a year. Can I take that loss against my other W-2 income?
Yeah, great question. So I'd say the IRS would say there's no profit motive there. Obviously, if you're not generating enough revenue to pay for your expenses and you're just showing losses every year, at the very, very least, you'd be able to deduct your expense to the extent of your income, and that'd be about it, basically. Yeah, that's a good point.
Okay, so there you go, Ham. Hopefully that helps you out with your question. That was a great question, by the way. Mark Santucci says, I think the term is common players, not trash, when we're sending our comments into the garbage. Well, they end up in the trash, so they become common players. And it's not an insult against the player, but that card, well, it's a common, it becomes trash, Mark. But I hear what you're saying. Mark's a true hobbyist. true collector, no doubt about that. He also says, so doesn't the person who you buy the 1,500 card lot from have to pay the tax? Yes, Mark, that person has to cover their business, but the purchaser, when they sell them, now has to cover their business as well and take that stuff into account. Okay. And then here's another question from Mark. What if you own a card store and you do a show, say Dallas as an example? Do you have to file separately or does everything go together? So I got a card shop, Mark. I sell cards during the day there. I travel out of state to go to a card show. I generate revenue there. Does that all combine into one business?
Yeah, more than likely. I mean, especially if you have just one entity or just say a simple sole proprietorship. If these activities are related, then you can combine them. But if you're doing a snow cone stand on the side and you're also selling baseball cards and you're also a plumber, you'd have 3 different activities. But if they're related, these activities are pretty closely related, you could combine those in one.
There you go. Vintage says, imagine the tax Marshall Fogel would have to pay if he sold his PSA 10 52 tops. Mickey Mantle for say 30 plus million, he paid 100K for. Well, the thing there is that he will have to pay tax on it. He will pay tax on that because when you bring in 30 million plus, that's on everybody's radar. That's, the bank's going to be talking about it. The FinTrack's going to be talking about it. That's on the radar. That's going straight to the IRS, I would think. And someone like that is going to pay. I don't know Marshall Fogel at all, but I'm assuming he'll pay his taxes. He'll have to, otherwise his estate will once he's gone. And that would be.
Oh, sorry, Jeremy. Sorry. The IRS does follow the news too. So if they see a big story like that and they don't find a Marshall Fogel reporting $50 million sale, he's going to have some problems for sure.
Yeah. Tip of the Mitt, thank you so much. Welcome to the show. Vintage Card Collector says, could you gift a card to a family member similar to a cash gift if it's under the annual limit and not pay tax? David?
Yes, you can. Yes, you can. So if it's under the annual limit, the giftor does not have to report the gift to the IRS, and the recipient doesn't have to report it as income. Honestly, you'd be better off leaving it to them after you pass away, because then they get that step up in the basis of the card, especially if it's a very valuable card. That'd be the best way to do it.
All right, good stuff there. And I mean, Google step up and all that. If you don't know what it means, there's lots of. We're not going to be able to get into the real minutia of everything here, but hopefully this is still at a higher level, useful and helpful to a bunch of you. I want to talk a bit about the character of the income that we generate when we sell cards, David. So, you've got business income, or you've got capital gains. Capital gains is usually taxed beneficially compared to regular income. I know it is here in Canada. I know it is down in the US. There's slightly different rules between the two countries. But David, how is this income characterized, capital gains or business income? And does the length of the holding period, and I know in the US you have a 1 year cap gain and a 1 year and a less than a year capital gain and a longer than a year capital gain. That's why I'm asking this. Does the holding period impact the nature of the income from the sale of cards as well? Just to add on to this, is a multi-pronged question, David. If you're in the business of buying and selling cards, I think it's all business income. But if you're casually doing it, like a lot of us do, does it convert, or does let's say I bought my Bobby Orr rookie in 2007 and I sold it in 2027. That's a 20-year holding period. Can I treat that as a capital gain? And just all the other questions I had there, please.
Yeah. So if ordinary course of your business, you're selling cards, you're flipping cards, that's ordinary income. Sale of inventory, it's business income. It could be subject to self-employment tax as well, if you're self-employed, obviously. If you're holding it for just as a hobbyist, and you've got this old card in your collection and you end up selling it. So if you hold it for less than a year, you're going to pay ordinary income tax rates, and those can be as high as 37% in the US. But let's say you're in the 22% tax bracket and you sell it, less than a year, ordinary income, 22% tax bracket, you're going to pay 22 cents on the dollar. If you hold it for longer than a year, this gets a little tricky, but the maximum tax rate on collectibles, which they consider cards to be collectibles, is 28%. But if you're in the 24% tax bracket, you hold it long term, and that gain doesn't push you up into a higher bracket than 24, then your cap is going to be 24. So it really depends on how long you keep it, whether you're in a trader business or if this is just something you've held as an investment.
So if I'm a type of collector that goes to the National once a year, I buy a few cards on eBay, a few cards on PWCC, a few from Heritage, ComC, wherever. I'm buying cards in our ecosystem, and I'm holding them. I'm holding them for greater than a year, every single one of them. And let's say I'm buying 10 cards a year and I'm selling 10 cards a year, but I'm always just changing the look and feel of my collection. I'm not really doing it as a business. I'm selling cards to buy a different card, let's say. Is that all going to be that capped out 24% capital gain tax rate?
Yeah, so IRS treats collectibles a little bit differently than stock. They put a max rate of 28% on the sale. So it doesn't mean you'll pay that 28%. Just depends on what bracket you fall into. But just worst case scenario, you're going to pay a max gain rate of 28%. Plus perhaps what they call the NII tax. I don't want to get too much in the weeds there, but if your income's over $200,000 as a single person, more than $250,000 as a married couple, you pay an additional 3.8% tax. So just be aware of that. So that highest rate you'd pay on a collectible is 31.8%. Okay,
and that it gets over 30 if you are making over 200 singly or 250 married. So it's one of those pay your fair share sort of policies there. MSG says, interesting information. A few things I just haven't thought about. Thanks, guys. Happy Father's Day to all the dads out there. Thanks, MSG. Good to see you as always. Michael Ham says, are there any special tax implications that apply to trading cards at $1,000 and higher? Is there a $1,000 threshold that comes into play, David?
Not that I'm aware of, no.
Okay. All right. Let's keep on rolling. So we talked about capital gains, the character of the income, the profits that we are making from these cards. We talked about records. Okay, here's a real good one. This applies to everybody, guys. So perk up your ears for this question. This is one that I've had. I've debated this with my friend Adam Gray, who's also a CPA. Now I have more of a Canadian more knowledge of the Canadian income tax laws, where he's more of a U.S. income tax laws. But in any event, here's what the question is. Non-cash transactions, trades, things like that. What about if I trade away a card that I paid $10,000 for in exchange for a card that is worth $20,000 because my card's gone up from $10,000 to $20,000 in value? No money trades hands though. So I bought a card for 10 grand 5 years ago. It's now worth 20. I'm trading it for another card worth, say, 20 grand right now. Is there any income, any revenue? Let me try and be technical. Is there any revenue to report from that non-cash arm's length transaction? Arm's length being not between related people.
Yeah, that's a great question. So original cost basis was 10. Now it's worth 20. You receive something that's worth 20. Essentially what goes on there is you've got revenue because you received something for $20,000 and you've relinquished something that was your original cost basis was only 10. I know it seems like on paper you just have a wash there, but you have to use your cost basis and not the value of the item at the time of relinquishing the item.
So the answer there is, on my tax return for that year, I'm going to report $20,000 of income or of revenue, a $10,000 expense for my cost of goods relinquished or cost of goods sold, and now I'm taxable for 10 grand. This poses a big problem in our hobby because we are such a these cards are so volatile, the prices go up and down. You hear about this same issue applies to the PSA upcharges for values of your cards. If they charge you more if they charge you more because your card is worth more than you said it was, and then 3 weeks later that player gets hurt and that card goes from being worth 20 grand back down to $10,000, you haven't really you now have a loss on your hands, right? So to the question of the trade here, David. So this is the issue. We make the trade. I report my 20K of revenue because I got a card worth 20. 3 months later, that card tumbles in value back down to $10,000. Meanwhile, I paid tax on $10,000 of profit to acquire this card, and that card took a tumble in value. Now is my only, and I think I'm going to talk myself to the answer here, David. I think which is, well, now when you sell that card, you're going to sell it at a loss, because now if you sell for 10 grand, but you're into it for 20 because you stepped up your cost basis when you reported the sale of the original card. That's how you step up the cost base. Well, now I'm going to have revenue of 10 grand, cost of 20, a net loss of $10,000, which if that's my only income for the year, I should get a refund of the taxes that I paid earlier on in prior years from the trade. Does that all make sense?
That jives. Yes, sir. You're on the right track.
So here's the next one. Mitch Grotman puts it in. This was my next question. How would the IRS determine the card is worth $20,000? And it wasn't addressed yet. Mitch, you're here because your Panthers just lost game 4, but I think you're still fine. But David, yeah, how would the IRS determine it if my trade, where I traded away my card I bought for 10 grand for a card that's now worth 20 grand, there was no documentation. I mean, some guy came over to the house. We did a trade. Obviously, 99.9% of people in this hobby are probably not going to report that anyway. But the people that do, how do they handle when that card tumbles in value?
Yeah.
And how does the IRS determine that it was worth 20 in the first place when they just come over and there's no evidence?
Yeah, so I would say the reporting of the original $20,000 transaction would prove up your cost basis. If you're reporting that you received $20,000 of that card that you received for the card you relinquished that was worth $10,000, that would establish your cost basis in that new card.
Yeah, that's the easy answer, because you've actually told the government that I made that trade and I did that. Now, two hobbyists, dealing at arm's length, but in, friends, why wouldn't they just say, well, we value both cards at $10,000. So let's just do the trade and do a document up, because now you're dealing at arm's length. So there's really, it's hard to question an arm's length transaction. Do up an actual bill of sale or a barter contract, whatever it would be called, and just say that we assign a value of $10,000 to each card going in either direction. But then could the IRS say, well, look, hey, we found a comp on Card Ladder that says one sold for 20 grand a month before you did your trade. So why'd you guys say 10? Speak to that situation.
Yeah, I remember that underfunded IRS and their paltry budget. So if it's an arm's length transaction and both parties agree, there's language in the code that states if you've agreed upon a price, then that is the established price, which is kind of nutty, because they're giving you free reign there. But if no one's forced to make this sale, then the IRS has to agree that is your new cost basis, or that is the sales price, because that's what you two agreed upon. Neither party was forced to sell or buy. Third party, don't know you from Adam, arm's length transaction. That's in the code for sure.
Yeah. So, and a good question here from Mitch. It seems insane to report a trade, he says. In David's opinion, is there any real risk there in not reporting a trade like that?
Yeah, well, the only risk is that the IRS finds out. How are they going to find out? Again, this is not tax advice. I'll put on my plumber's hat for a minute and say that, the IRS is not able to track probably any of these transactions. If you're if this is the only source of income you have is trading cards, and you show up at the audit with a freaking Ferrari or a $20,000 gold watch on, they could do lifestyle audits. They could seize your bank accounts and see what goes through there. I mean, you can't eat sports cards. You can't trade a sports card for a sports car. Or maybe
yes, you can.
Maybe you can. Maybe you could trade a 52 Mantle for a Ferrari, but you're going to have to deal with cash at some point going through your bank account because you got to pay bills and whatnot. There's probably ways for the IRS to find out. I'm not condoning not reporting it, but how would they find out? Without a full-blown audit, they probably wouldn't. Not many people get audited and they want to question every single item on your return. Usually if they suspect fraud, that takes at least a year for that fraud case to get established. And there's got to be reasonable cause for them to look into you, and they have to prove, ill will, malcontent. I mean, there's a lot for the IRS to prove that you've got, fraud on your hands, essentially.
All right. Good stuff right there. Chris C says many scenarios seem to have a don't ask, don't tell vibe. Yeah, I think that's, I think that's how a lot of collectors are operating. I mean, especially with trades, you're not thinking, and you're going to forget, David, you leave the card show. Like, I forget where I get some cards from, like a trades that I don't remember a lot. I tend to document just about everything, so I feel comfortable, but I don't just remember them in my head. So if you're not documenting everything you're doing, how are you even going to remember which trade these can? I know some people remember it all, and you're lucky to have those memories, but that's tough, right?
Yeah. And I always tell people, we don't have an attorney-client privilege because I'm not a tax attorney, and so I always tell people, don't tell me anything you don't want the IRS to know, because if you tell me, hey Dave, I've got $1 million in cash in my in my safe, I've never reported it. If you give me that information, I'm obligated to. If you're audited, I'm obligated to tell that IRS that information. So don't ask, don't tell. That's a good policy.
Mookie Chelson says, Jeremy, you're describing the Wander Franco write-down loophole. That's why people harvest tax losses at the end of the year. They sell assets that are at a loss to write off against their profitable activities during the year.
Yeah.
Sorry, go ahead.
Yeah, you buy a Wander Franco superfractor for $100,000. I don't know. Somebody paid a lot of money for a Wander Franco card, and it's worth 50 cents, whatever it is. Yeah, sell it before the end of the year. I mean, if you're trading cards for a business, sell it before the end of the year and capture that loss for sure.
Capture that loss and utilize it. Right. For the game says have to report the loss on the IRS. Just a horrible process. Definitely is. Vintage Card says, now we know why prominent YouTube channels who film at shows never say what they pay for a card on film. Yeah, that might be why. I mean, that I don't know if that's exactly the reason, but I could see there being other reasons as well, but that's definitely one of them. David, your thoughts?
No, that's another thing. You got to be careful about what you say. Everyone's, you go to the bathroom anymore and look at here, I went to the bathroom, and they've got to post it. They're out of town for 2 weeks. They're telling people they're out of town for 2 weeks. Like, what are you doing? You got to be really careful about what you put on social media because, that can be used against you. Yeah, for sure.
Chris Perkins says, I play poker full time and have done so for many years. None of my poker friends nor I have ever been audited. My CPA says it's too much of a headache for the IRS to care. I imagine it's the same for cards. Chris, your thoughts on that?
Oh, yeah. So, yeah.
Did I say Chris? I meant David. Sorry.
No, you're good. You're good. No worries. Nor I thought he was going to join the chat. No. So, yeah, he's right on the money there. Again, I hate to say it this way, but if there's nothing that looks fishy on your return, more than likely you're going to be, processed just like anybody else. If the IRS has no reason to investigate you, and you're not writing off huge losses on your sports card business on your return, and you're not drawing attention to your return, more than likely your return's going to get processed just fine. And yeah, how are they going to track every single item, and so I don't know, who knows? This could be the argument against digital currency. I mean, if they eliminate cash, which they wanted to do for many, many years, every transaction's tracked. Who could hide anymore, right? So anyway.
Okay, let's change it up a little bit. Still open to more questions from the chat, but I want to talk about this now: entity formation. And does it make sense for people who are in the hobby to have an LLC if you're in the States, or just a simple corporation if you're up in Canada? Does it make sense to incorporate and have all your card activity happen within that separate legal entity? Are there benefits? Are there tax benefits, maybe lower tax rates, tax deferrals? And how would you say that kind of balances off against the cost of maintaining a corporate legal entity in terms of now you're filing corporate tax returns and that sort of thing? Thoughts on that, David?
Yeah, that's a good question. If I always tell folks, if you know that your company is going to be profitable, you're going to carry this on as a real business, and you're dealing with the public, it's not a bad idea to consider forming an LLC. You have to be really careful about that, though. Some states are really, really harsh, like California. God bless those people. You start an LLC, 3 LLCs in California. Well, guess what? You've just created $2,400, $800 per entity in annual filing fees, even if your revenue is zero, right? Whereas let's say in the state of Texas, if your gross revenue is under $2.5 million, you pay zero to the state, no annual filing fees. You still have to file an annual report. I like LLCs a lot because they're super flexible, and people will tell you they're flexible, but they don't really know why. And the reason is because an LLC can be taxed or treated for tax purposes, or have a tax classification of about 5 different ways, especially if you're in a community property state like Texas and about 7 or 8 other states. So you could form an LLC and have the legal entity if that's your goal and you want to try to limit your liability exposure. I'm not an attorney, by the way, so seek out an attorney's advice, and then you can actually choose your tax structure within that LLC. So you have a legal entity and then you've got a tax entity, and you can tell the IRS, you know what, first year I'm going to be a disregarded entity, which is a fancy way of saying a sole proprietorship, because I don't know where this business might go. I might lose a couple $1,000s the first year, but maybe year 2, year 3 rolls around and you're netting, I don't know, $80,000, $100,000, $120,000 in profits. Man, maybe we jump over to S corporation status to where we can shield ourselves from self-employment tax. That's the beauty of an LLC, is you can sort of move between tax structures, start out simple, and then move to something else.
Okay, good stuff. Thank you for that. Vintage says, I have to imagine for any IRS audit, they determine if the juice is worth a squeeze when deciding to audit.
Nailed it. Right. So it's a business. The IRS is a business. They're looking, internal revenue, right? So they're looking to generate revenue. If they have to spend 1,000 man hours to go after Jeremy Lee, and their best case scenario is they squeeze $1,000 out of them, they spent, $50,000 in man hours to go after $1,000. It has to make sense. Exactly right. So if you've got a normal W-2 guy and he's reporting his income, anyway, I won't go into all that, but yeah, he's right on the money. He's right.
Yeah. Bubblegum Cardboard, says the same thing. I'd assume IRS and CRA are unlikely to chase down small fish dealers. So, yeah, I think that was the comment that actually instigated Vintage's comment here. So thanks for that, fellas. Right there. Vintage says living in California would absolutely suck for a laundry list of reasons, to which Chris C responds, yeah, well, ask my friend who lives in Florida about the gators, humidity, etc. Every state has its flaws. Little state versus state in the chat right now, guys. All right.
California's rough, man. They are rough on businesses. It's
99 cent. Any plans on a Canadian tax expert in the future? This seems more American based. Yeah, 99. As stated at the top of the show, David is specifically an IRS, U.S. tax code professional and specialist, not Canadian, but I've practiced Canadian tax myself for several years. So, and as I've stated, a lot of what applies in the States does apply up here. There are some nuancy differences, but it's a lot of it is the concepts are pretty much the same. David, go ahead.
Yeah, maybe I could brush up on RRSP and OAS and RIF accounts. I do have a few Canadian clients, by the way. I'm not a Canadian tax expert, but just a few Canadian clients that come to me. So it's pretty interesting, the differences.
Here's a question for you, David. Kind of now, not tax, but I'm just curious. Like, there's been a lot of talk in the hobby over the past few years about, can sports book cards be investments? And because you even said it yourself earlier, they're kind of like stocks. Well, they do have some properties that are similar, and that we buy and sell them. There is a market for them. There are pricing tools out there, but they aren't like stocks because they don't pay. Even though not all stocks do, they don't pay dividends. There's no spinoff income from them, but not all capital assets have spin-off income, right? Some of them are just prone to capital gains. Now, with that, what is your opinion on it? Do you see sports cards being potentially investments, some of them, or to you, are they simply, the hobby? They're just to have fun with? What are your thoughts on sports cards as investments?
I won't give my wife's opinion because I already know that she says they are not investments. I won't be as harsh as the vintage sports shack guy. He says, don't be stupid. These things aren't investments. I don't know. I can't wrap my head around it. I mean, if they are investments, they are highly speculative. But then, you have Leighton that collects and, deals in vintage sports cards. I mean, if you look at the increase in value of a 1952 Mickey Mantle over the years, I mean, you'd say, wow, what a heck of an investment. If I paid $25,000 for it 30 years ago, what's it worth now? Gosh, if it's an investment, it's a highly speculative investment, and maybe don't allocate much of your portfolio towards these investments, let's say.
Yeah. I mean, my thoughts are that it's up to you, the purchaser of that card, to decide for yourself if it's an investment. It's not up to anyone else to tell you if it's an investment or not. So for that reason, and kind of that reason alone, plus my own personal experience, they certainly can be investments. There's no doubt about that in my mind. Now, I'm not talking about the latest and greatest rookie whose value is super volatile, but I'm talking about more blue chip, iconic type of cards and players who, if you look at the history of their value curve, it's pretty much smooth. When you smooth it out, it's on a steady increase over the past several decades. So, that's my thoughts, and that's how I approach it. When the way I've said this 100 times on the show, David, some people are probably nauseated from me saying it, but if I'm spending an amount of money that is significant to me, I'm going to think about the investment properties of that expenditure, because if it's significant, that means that money may come in handy for my family at some point in time, right? So if I'm going to now deploy it from family life expense and into sports cards, I want to know that I'm going to at least be able to maybe get my money out of it down the road. That's kind of my minimum requirement.
Yeah.
Or even though I can't tell you what's going to happen, but that's my minimum desire. But really, I do hope it goes up in value. Of course, I hope it goes up in value, and that I can sell it for a profit when I am ready to sell it eventually. So does that make sense to you? I mean,
yeah. In the broad definition, it's an asset. It's a tangible, personal property item, and you expect it to go up in value. That is the definition of an investment. It's not like a stock, but I'm sure there's cards out there. Michael Jordan rookie card. I'm looking at your Wayne Gretzky OPG on the wall there. Those cards have certainly dipped in value up and down and whatnot, but I mean, you can count on certain cards being worth something at some point, whether it's more than what you pay for it, less than what you pay for it in the future. It's hard to determine that. So yeah, I wouldn't say every single sports card is an investment, just like you said, the rookie that, or Wander Franco, prime example. Anyway, so yeah.
Yeah. Okay, good. Lapper says, if nothing else, reasonably scarce cards should keep up with inflation. I think so, unless that player doesn't keep up with the expectations, or gets hurt, or does something stupid. But I think Lapper is thinking about reasonably scarce cards of maybe players who are already established themselves, either active, eventual Hall of Famers or retired players. Chris C says vintage is safer than anything else other than that. I think it is far riskier, far less high grade cards from the 50s and 60s than today. I think so too. I agree with that. Well, listen, we don't want to get too far into, even LeBron James Topps Chromes have tanked in value. Well, everything tanked, not everything, but most things have tanked in value since the peak in, 2021, but it depends on your horizon as well. How long do you intend to hold? So there's a tie into the tax discussion, right? How long do you intend to hold the card for, right? If you're going to hold, if you want to say, how many people reached out to me when Connor Bedard cards came out and said, I want to buy a Connor Bedard card for my kid. I want him to sell it when he turns 18 and buy a car. Well, that's, they're looking at that as an investment, even though it might be a terrible one. That's what it is in their mind. So I think that is somewhat of or you hear about a Wayne Gretzky rookie or a Michael Jordan 86 Fleer. Notice I didn't say rookie, or whatever it is, Yeah. So yeah. Anything to add to that, David?
No, sir. You are a wise man, wise words.
Tip of the mitt. Happy Father's Day to you, and thank you so much. Lapper confirms. Yep, established blue chips as you actually. Yeah, of course, Lapper. I think we think similarly along those lines a lot of times. David, are you going to be traveling to the National in Cleveland this year? Have you ever been to the National? You're in Texas. Have you been to the Dallas Card Show? And if not, when will you go?
Yeah, I would love to visit at least the Dallas Card Show. I don't know about the National. I think I would be a deer in headlights. I think probably I'd cut my teeth on the Dallas Card Show first, and then perhaps one day go to the National. I would love to pick up some kind of rare Ken Griffey Jr. card that I've never seen before. That'd be really neat, or at least to see it in person and just to be around the other guys that collect. That'd be a lot of fun.
Okay, well, even if the Cleveland or any national, and it's going to, after Cleveland this year, the next 3 years consecutively, it will all be in Chicago. Great place to visit, obviously. Yep. Even if you feel like you'll be a deer in headlights, it's okay. We're a friendly bunch. Most of us are. You should. Yeah, I'd recommend coming out anyway. Okay, here's a question from Space 99 Yak. Back to taxes. He says, could I fly to Hawaii, stop at a local card shop, buy a $5 card, sell it for $10, and write it down, a $2,000 loss? Wouldn't that send some red flags? So I think what he's buy a card for $5, sell it for $10, but take a $2,000 travel expense as well. What are your thoughts on that?
Yeah, that's a great question. Like I said, the primary purpose of that visit is to go purchase inventory. And I personally, who would spend $2,000 to go buy a $5 card? I think the IRS could see through that, depending on the auditor, of course. If the travel cost is deductible, if the primary purpose of the trip is business and it's reasonable, right? More than likely, you're not going to spend $2,000 to go buy a $5 card. But if you spend a significant amount of your time, like I'm going to the Hawaiian card shops because they're the best card shops to collect Mario Lemieux. How about that? And I visited 10 that week, and I spent 15 hours a day searching for the $10 boxes or whatever. I couldn't find one, but I ended up finding a $5 card. I mean, if you could prove that you spent a substantial amount of time and your reason for the visit was business, sure. But you got to be careful with that for sure.
Yeah, I would caution as well. And Vintage Card Collector says, does the IRS code define what categories of items are classified as collectibles? And this is what I love this question, because I know up here in Canada, I don't think we have any real documentation or bulletins issued by the CRA about sports cards. I think they do speak to coins and stamps. And I think practitioners up here, by default and by lack of any other guidance, lump sports cards in with those, but they're not specifically mentioned. Can you address the question as far as the IRS goes?
Yeah, sorry. This is a great question. So IRS says collectibles are, they give a few examples on their website, which their website's pretty garbage, but works of art, antiques, rugs, metals or gems, coins, cards, any alcoholic beverage, which is kind of odd.
It does say coins, cards. The word cards is there.
And sometimes it won't say cards, but it will say any other tangible personal property that the IRS determines is a collectible. So
at their discretion?
Yes, exactly right. Exactly right. That's the tough part about it.
Until they're challenged by a good tax attorney, right?
Sure, absolutely. Absolutely. Yeah. That's a great question.
Yeah, great question.
Card collector's on fire.
Yeah, I mean, he always is. Lots of great questions here tonight. We're at the hour 50 mark here, Mark. Or David. Mark. Question. Do you have, I mean, you're here because you collect cards too. Do you have any cards on your desk right now? Anything that you could just show? Do you have anything handy?
I'm certainly glad you asked me, because look what I picked up, sir.
Oh, let's see.
Hold on.
That's a 1983 Peachy Wayne Gretzky card. One of my favorite Gretzky base cards from the 80s. I love that image.
Yeah, you nailed that. I did this in your honor, sir. I went to eBay and I thought, I'm going to pick up a Wayne Gretzky card because that's cliche, right? That's hockey cliche right there.
Yeah.
I said I'm a Griffey collector, so I've got all his rookie cards. I've got them all in PSA 9. I thought about getting the 10s. Those are quite expensive. They always say, sell the 10s, keep the 9s, whatever. But some cards I wasn't even aware of, to be honest with you, because cards like this when he's in the minor leagues, thought that was pretty cool. Here's another one where he's playing for Bellingham. Didn't even know that card existed, to be honest.
Very cool.
I thought that was pretty cool too. Just when I was younger, I wasn't concentrating on the minor league cards. So, even this one, which kind of shocking, you're around this your whole life and you know about score and whatever. And this isn't a very valuable card, but I thought, how cool is that? I didn't even know that Series 2 score existed. Sort of like a traded, I guess, almost like a Topps traded. Speaking of Topps traded, I got that one too. And this guy here, another one that I wasn't sure was even in existence. I thought that was really, really neat. Again, this isn't very expensive card, but never even knew that existed. And of course, there's the favorite of all right there. I've got about 20 of those in raw. That's the only one.
I got the painting of it right there.
Yeah, there you go. Yes, sir. That is the one, not that particular one, but that's the one I pulled in a card shop. Shout out to MVP Sports Cards. It's no longer in existence. One of the owners is actually still one of our clients, which is really, really cool. I was 10 years old, pulled it out of a pack, and he's like, "Do you know what you just pulled?" I wasn't familiar with Ken Griffey Jr. at the time, and he put it in a screw down case, which everyone's like, "Oh my gosh, why would he do that?" But anyway,
and that's the same copy that you've had since you were 10 years old.
No. And what's a shame, Jeremy, is I don't know. I've got 20 of them, so I don't know which is which at this point, which is fine. But I will say this: I do remember taking it out of the screw case and looking at it and thinking, "Oh shoot, man, this surface is trashed, and the corners aren't great, whatever." But this one's interesting too. So you'll get a kick out of this one. So. This is, of course, Griffey again there for Vermont Mares. I bought 3 of these off of eBay, and you see the centering, how poor that is, right?
Yeah. To the left and
really,
high.
Yeah, pretty bad. Well, check this one out. I was like, you know what? Wow, no one's buying this one. I'm going to snatch it up. Well, it turns out that more than likely, and somebody with real experience might be able to tell, I think this one's a counterfeit, which is, this some of the stupid mistakes you make and you learn anyway. And if I had to pick, because I saw somebody on Twitter pick this up, I thought, you know what, I'm going to go get that. This wasn't cheap. This is the Silver Series. This is just one of the 9. Of course, I had to get two sets, because I'm kind of crazy that way. So got that one, and this one's really, really cool. So. My client, his name's Ricky Lee. They made a Netflix story about him, Netflix movie about him. I didn't know if you wanted me to bring this up, but it's called The Hill. If you guys get a chance to watch that movie, fantastic. I mean, Dennis Quaid's in it, plays his dad. Fantastic story, almost all true. You know how they Hollywooded it up, but he's a good friend, client of ours for many years. So grew up in the Fort Worth area, played for the Montreal Expos. He was called up and drafted and whatnot. And I think he spent 5 years in Winter League. He roomed with Andre Dawson. It was just a really, really cool story. But his back gave out and he never got to play in the majors. And just a sad story. But he said, David, I want to bring this card to you. And I'm like, okay, well, I'll check it out. And he said, yeah, check this out. And so he gave me this card, but I'm really holding it. I'm not going to sell it. I'll keep it forever. If he wants it back, he can have it. But I thought, you know what? I'm going to get it graded just to see what grading's all about. And I kind of guessed the grade. I thought, well, it's between a 3.5 and a 4, or 3 and a 4. And sure enough, it graded a 3.5. So there's the 57 Mickey Mantle. Sorry about the glare, guys.
Beautiful card. Love it.
I really love that card too, so good Very friend. Nice. I thought, you know what, I'm just going to keep it, and I had it on my desk and I thought, you know what, I better not do that in case someone tries to steal it. But
anyway. Great stuff. Nice selection right fun. There. Before we wrap up, a final question from Space 99 says, when you buy cards on eBay and they charge you for the card, sales tax, and shipping, when you go to sell the card, can you write off the card price and shipping, or the shipping, the card price, and the tax, the sales tax?
All the above. So
all the above. Is it as simple as all the above?
Yep.
There we go. Okay, let's in the interest of time, we'll leave it at that. Very much. Mookie, David, so if you sold the Griffey you pulled when you were 10, what would your cost of goods be?
That's a great question. I'll answer that. That's a great question. So my cost of goods sold would be, what was it? $2 for the pack, something like that, $1.97. I thought, $1.97, you got to be out of your mind. When packs were $1, I'm like, you got to be kidding me. So you take the price and then you divide it by the number of cards in the pack. I can't remember, maybe 15, 20. It's
pennies. It's pennies. All right, we're going to wrap up, guys. We're going to wrap this up. We got After Hours starting in about 3 minutes here on the Sports Cards Live channel. Joe Perot will be joining me for some freestyle hobby talk. We have a couple topics. I'd like to just remind everyone and thank everybody who did subscribe to the Vintage Spotlight YouTube channel today, or podcast. We announced it earlier tonight for those of you that just got in here. Vintage Spotlight, a spin-off podcast and YouTube channel from Sports Cards Live, based on the segment that Leighton, Sheldon, and I have been doing here now for for over 18 months, I believe. Please check it out. We're going to be loading up new episodes once every couple of weeks. That is the plan. But the Vintage Spotlight, which has been a segment here on Sports Cards Live for a year and a half, is now its own podcast and YouTube channel. So I ask everybody to please go give us a subscription and check out the videos. Hope you guys like them as they come. Vintage Card Collector says, thank you for the great info, David, as well from myself. Mark Santucci says, very interesting. Thank you for the game. Says, thanks for the show as always. Lapper's happy for some After Hours. Tells everyone to hit that like button, everybody. I appreciate that, Lapper. Thank you very much. All right, David. Going to say to the chat, get your final comments in because we're wrapping in about 30 seconds here. David, I want to say thanks to you for coming on. This was great. Super informational. We got through pretty much everything. So that's awesome. Final comments to you, and then we're going to wrap up.
I just want to say thanks to you, Jeremy. You sacrificed your Saturday nights over the past several years, and that means a lot. I think that means a lot to this community. You guys are great. I appreciate you having me on on your show, and appreciate your listeners, your viewers. Happy Father's Day, everybody. And yeah, if you guys need help with any tax related questions, don't feel free to hit me up. Okay.
Yeah, and how can people reach out to you? I will also put it in I'll get you to do this, David. Send me a quick email with your socials, because I don't think I have those yet. Send me a quick email with your socials. I'll add them to the description in this video once I get them, everybody. And if you want to reach out to David, you can do it that way. So thanks again, David, for coming on. After Hours starting in just a couple minutes, guys. So thank you for that. Mookie Chilson, appreciate that. Says, outstanding work, fellas. Tonight was a genuine service of the hobby. Thanks, Mookie. I wanted to do this for a long time, and I hope that it really was important for a lot of you guys. Oh, Space 99 Yak sending a $1.99 super sticker. Thank you, Space 99 Yak, and welcome to the show. Haven't seen you around here too much. That's what I mean. You've been here all night, but welcome to Sports Cards Live. And I'm grateful for the contributions. All right, guys, that's going to end tonight's episode. David, thank you again for joining. Again, after hours starting in a couple minutes. No PWCC Hockey Weekly show tomorrow night. We are taking Father's Day off, guys. But with that, thank you, everybody, for joining. This was fun. This was informational. And with that, this episode of Sports Cards Live for June the 15th, 2024 is now over.